Hey, Steve, Andy, what's going on?
Hi, thanks, Scott. Hey, Andy, what's up?
Hey guys, hi Scott, Steve, everybody out there. Glad you joined us.
All right, well, here we are. I have no idea what to say. I'm just kidding. All right, welcome to Trade of the Week, everybody. We get started. I'm good to know you see and hear us with the audio and video check from Scott. Let's get started. So the disclaimer, as usual, we're not registered investment advisors. We don't manage money. We don't have the licenses to do so and didn't take the tests. So anything you hear or see today talking about stocks or the market is really just our opinion. It's not to be taken as financial advice. So that's the purpose of this slide, and I think you guys all get that. We've been around since 2003. I'm the original beta user in the process, and it's been a long road, and there's been a lot of layers on top of the original product, and so it's not something you can learn in just an afternoon or a couple days. Most people, it takes them a good month to really kind of get a feel for all the power and all the different functions and the things that you can do with this product. And so we recognize that, and we try to make as much availability as possible to help people get going in the right direction, starting with the live trading room. Barry's back from Greenland, back hosting his live, free, I might add, trading room. A few hundred people in there every day, and a handful of really good traders as well. So if you're paying for a chat room out there, you need to check this out first, just to compare and to see if you're getting the same value, because I bet you're not. Barry is very generous with his time, shares his desktop and his knowledge, and helps people also with scans and shares scans, and it really helps people get going. So that's available bell to bell during the week. We also have the afternoon webinars, such as now, Monday through Thursday to be exact, in the afternoons after the market bell. And Fridays, we don't do afternoon webinars because everybody's heading out. So we have a morning session for 3 hours, up to 3 hours. Sometimes it only goes 2, depending upon the crowd participation. But it's the best way once a week on Fridays to pull up and say, hey guys, don't understand this, or can you demonstrate that, or having trouble trying to scan for this, can you help me come up with a configuration for that? It's a great place to just come up and get open content. We don't record it. There's no need to record it because we never really know what we're going to talk about that day. And we encourage people to not look at the recording. We encourage them to come and take advantage of the live forum that it is and get instant feedback and visuals. And then, of course, lastly, it talked about the TI University, again, back during the market hours, but Monday through Thursday, and it restarts and recurs every Monday. It's a live webinar, such as we're doing right now, using the same GoToWebinar, with some basic content on Monday, and then kind of get you going on Tuesday, Wednesday, and the more intermediate stuff, and then definitely more advanced stuff for those that want to stick around on Thursday. It's a recurring live class. It's not a evergreen webinar where you have to wait and talk to a robot to get a question. We're here just like we are now, so it's more geared for education. That's why we call it TI University, and it repeats every Monday through Thursday. So that's it for the intro slides. The context, as usual, the theme is man and machine, human and machine combined. Great quote by Paul Tudor Jones there, who's still on his game. Andy and I were discussing an interview that he had recently, and he basically was asked, what would be the best asset class you want to own right now? What's the best asset? And he said, without a doubt, gold. And within a week, gold just took off. I mean, the guy's good. But his quote there is timeless. We can use technologies and machines. You don't want to turn your back on them and let them do everything. That's not going to work out. You want to use the human interaction, blended human discretionary decisions, getting curated ideas from the machine, whether it's the AI or it's something that you want to come up with on your own and curate it. And we're actually going to do a little bit of back testing and optimization today. So that's the same function as what I'm talking about, using the man and machine combined. That's where the real power is going to be and is currently. So we got the date right. Typical formula as usual. Got some market thoughts on where we are. You're crazy if you're trying to short this market, basically. Andy's got some observations as usual for the Holly recap. Our trade of the week Xilinx has not triggered, but I have some thoughts on it for sure. And then we're going to go back and we're going to back test an idea. And I'm going to kind of tie a few things together. We'll just tease you with that. I think you'll like it, especially swing traders. And then take a look at last week's alerts that's set. I think once again, there was some alpha, there was some profit generated from the alerts that we looked at and curated and sent out to you guys. So we'll revisit those, and I've got a list of 6 or 7 new ones today. And so with that said, we'll go into the first segment, market recap. Grab the pen. And so discussed with Jamie yesterday, did not save my changes. You know, these lines were interesting before, but I don't think they're interesting anymore. We've moved through all this junk down here. This is old news. This is last year. What is significant is, there we go. Lining up is that, actually I'm gonna do this a little bit more. I'm gonna go back on the original all-time high. It'll make more sense. There we go. So that top line, orange line, bit of a muddle back here for 4 days. Market couldn't get above, or close above, I should say, rather. Tried, gapped above, and still closed. Never a close above. This is a very significant pivot line, a prior all-time high double top line, if you will. Double tops, triple tops are very rare, and we didn't see one. We went right through it, albeit we blasted through and then had to digest all that and pulled back. So that's why I put my second level of interest. The second orange line should be acting as current support, as this higher low is holding this bull market intact. And the longer we sit here, with the more these moving averages start to fan out and do their thing. And of course, this rising 10-period moving average is going to start getting the attention. If one of these daily candles can come down and tap and touch that 10-day moving average, well, that might be the all clear signal for the algorithms that run these markets to start switching and looking for more of a buying bias, perhaps the quant funds or whatever you want to call them. But more than anything, this orange line has to hold. Therefore, if we have a day where something happens and we get a close down below, into this level, that's not going to be good. It's not going to be bad, but it's not going to be healthy for the most part of what we need to see right now. What we need to see right now is a respect of this moving average, and definitely respect of this line, and coming up right underneath is the triple threat here of the 20-period moving average. So we have a lot of reason for support in this area. A bit of a small gap that could be tested on maybe an opening jam down as the algos try and run the stops on the opening first 10 minutes, as we often see, but this is the area that kind of needs to hold. So we'll see where we go from there. I'm going to talk a little bit more later in the afternoon, later in the session here, about how to use this A-table concept along with an event-driven alert that Andy created. And I'm starting to really tie these two together in a way, because I'm seeing some bleed through in some of these. So we'll come to that. But getting back to the market analysis, there's no case to be made to be short. If you are, you're basically hoping for some black swan to come out of left field that nobody has seen and take the market out, because otherwise, the semblance of the army that's marching is got momentum behind it. And as we said, or JC Peretz like to say, triple tops are very rare and quadruple tops are non-existent. So this did not turn out to be a triple top. We blew right through it. That's typically what happens when we get into these double top type discussions. When you come back through them, if they don't hold, you have to really respect that. So again, just another reason why I feel this orange line is so pivotal, and pivotal, to be using the correct word, is so important to hold if this market is going to continue. Andy and I have seen many summer rallies where you just are like, man, when's the pullback coming, right, Andy? We've seen those summer chugs where they just grind higher. And here we are. It's possible we could be setting up one of those summer chugs where you don't have steep pullbacks. You just have kind of a grind higher. Matter of fact, I got an email, and I shared the conversation with you with Eric, a guy that we know who ventured off early into the quant space and turned into the kind of the HFT fund. And he literally said in the email to me, he goes, these summer grind markets, they're not good for us. They don't give us a lot of volatility. They don't give us a lot of opportunity. So I thought that was kind of interesting, because that was somebody who's coming from the HFT market making land. Somebody who's trying to make a penny 50,000 times a day. So that's the S&P. No bear case in sight. Need to hold that orange line. There's really nothing much left to say on that. The NASDAQ actually is facing I don't think we're going to see a double top in the NASDAQ, but we blew through the prior highs back here, and currently we do kind of have a little double top thing happening right there, but I don't think that's going to last for long. I just feel like this is behaving really well. Look at how the NASDAQ did in fact touch that moving average today, maybe signaling a possible attempt on that line tomorrow. I wouldn't be surprised to see an attempt at all-time highs tomorrow, because We didn't get the gap fill. It'd be nice if we got the gap fill, but we didn't get it. But what we did get is the 10-period moving average touch right there. And again, I'm going to be talking a lot more about that when we get into these two scans, talking a little bit later and back testing and optimizing one of them. Question from Randy: does the low volume on the green candle days concern you? You know, this market seems to have thrown out the axiom, the trader's almanac when it comes to volume. What we're still seeing is big volume days on the downside. We're still seeing big, but the market doesn't really seem to care. 1 minute you might think this is distribution and the beginnings of a market correction, but it's not. This right here, it's July 4th. I think it's just, we had abysmal attendance, honestly, guys, in our Trade Ideas University right now. So that kind of tells us that it's light out there. People are taking extended vacations. July is typically the American summer vacation month because of the 4th. And August is typically the European vacation month where they all head down to the Mediterranean. So July and August are going to be slow months. And answer the question about volume, I'm not surprised to see that. I think it's holiday driven, but it doesn't really concern me. To quote our good friend Brian Shannon, only, starting over there, only price pays, to the backwards S. Only price pays, much more than concerning ourselves with what this is doing down here. All right, so not much really to say other than the IWM does have a possible game of catch-up. So if somebody's looking for where is the inefficiency right now, I'm talking big hedge fund guys or quant funds, look at all this space between the Russell 2000 small cap index. Now, granted, a lot of these stocks are not making money. That's why this index doesn't do as well. They're small caps for a reason. But the point is, if the market continues, NASDAQ and grinds higher to all-time highs, and same with the S&P, people are going to look at this. They're going to look back and they're going to see value here. They're going to say, man, might be time to put some money to work in small caps. So that being said, if we have a day where your trade ideas alerts are going off, and every now and then you get these a couple days a year where for some reason the small caps are just in favor across the board. It's stocks under $5, under $10 are popping everywhere, making new highs like popcorn with huge volume. Those are interesting days, and if you see those days, throw everything out the window that you're doing and focus on only small caps, because they can be really interesting days. We could be setting up for that. Again, the point being, the big funds looking for value, a lot of space between here and all-time highs. Whereas we'll finish up lastly in the industrials and the Dow, just a beautiful looking chart. I mean, just wants to go higher. I just don't know what else to say unless something comes out of left field. We'll see what happens.
Which is always possible.
Which is always possible in this crazy world that we live in. But back to our big, index here. Can't emphasize this level enough. I think pivot points are really important to me. And then the moving average, the 10-period, gauges momentum. There are times when market is not in a period of momentum, like back here, and it makes it really hard to figure out what the hell is going on. But when the market is in a semblance and is moving forward in an orchestrated movement, this line becomes very interesting. So that's what I look at, and that's what I'm seeing in the market. Unless Andy wants to add anything of interest.
Yeah, Steve, there's not a whole lot to add here. I mean, everything you said is just spot on. Volume, I mean, we're getting into summer volume, and we could just grind higher, and I think that's possible, as long as we keep the macro news at bay, any kind of real negative macro news. But which, I don't know, for an active trader sometimes can be mundane. But oh well, it's the market we have, and we get it a lot in the summertime.
Yeah, you and I have seen enough summers, and there's been a handful of them where it's like, man, look at this. It's just there's no pullback in this summer. It's just switch is set to buy, and buy the shallow dip and keep buying. All right, so that's that segment. Doing good on time. You want to add anything on the Holly AI stuff?
Yeah, I'll grab it and add a little bit. I am on my laptop on a Wi-Fi that's not a country Wi-Fi, so if I start to just steal it back from me, if I start to, let me switch the screen.
I can send
here.
it to you.
Thank you.
Yeah, Wally, you just take the normal scans and your normal volumes and relative volume filters, and then just set them for under $10. You could set aside an alert to just focus on those to try and catch that one day, 1 or 2 days if they do start popping.
Yep. All right, well, let's take a look at how Holly fared today, and not really that bad considering up until the last 30 minutes of the day, the market fought its way back all day just to try to get flat, and then of course had a little bit of bump there at the close, but not real impressive. There was some things moving out there, and Holly caught a couple of them, and we'll go through that. For the most part, the trade count, except maybe for Neo, was not very high. I'm not going to look at Holly 2.0 because she only had 2 trades and she got out really quick on those. Reduced risk for a very small $4 loser, and this is based on buying 100 shares, so that tells you there was hardly anything lost there. But man, Holly Grail had a really good trade in Dish. Actually the first trade out of Holly Grail today, and it was a beauty. If I pull it up right here, you are going to notice it was a contrarian play, a pullback play. So there was the call. The price went a little bit lower, but no pain at all. I'm just gonna go ahead and call it no pain there at all. And then you get a nice little bounce and pretty much all day. Now, real quickly, guys, if you're looking over here in Holly in full risk mode in Holly Grail, and you see she's up $105, and you're looking at mine, and you're saying, now wait a minute, you're showing it up $154. That's because we show it over here as Holly buying 100 shares of every stock. Whereas what you're seeing in my screen is you'll see the shares here, different sizes. It's based on a stop loss of a maximum $200 loss, risk. So you'll never see anything in over $200 in risk off and risk on mode. So you're risking a little bit more. So if you're a little bit more aggressive and you want to press it up, it goes to show you're only playing 100 shares, you maybe only made $105. But if you were playing more shares and only risking $200 per trade, you can see the profit there was quite bigger than what you saw in the channel there. But other than that, I'm not going to spend a whole lot of time. The rest of them, I'm just going to go over hit the nice trades here. Dish was a really good one today. Holly Neo, let's take a real quick look at it, and I'll also look at the strategies board. Holly Neo came to play today with about twice as many strategies as did Holly Grail. And you can see here, once again, if you're looking in full risk mode, that's the kind of stuff you want to see. This is saying if you took every alert and held on to it all the way to the end of the day, even if it was stopped out, you muffle that, Judy.
Throw a pillow on it.
Exactly. Neither one of us wants to answer it. Where was I? Oh yeah, talking about full risk. If you held on, even if you got stopped out, okay, when you're on risk on profit, it freezes it there on risk on, but full risk will continue to add up even at the close. So a little bit different there, but you can see here, nice. Look at all this green right here, and only about 4 reds. Holly has been doing a lot. She had a little stale period there back about a month ago, Steve. But boy, since that time, I know she had a really good day yesterday in a market that really wasn't doing a whole lot at all. Very sloppy market, and had a really great call, and several of them. But Overstock's the one that sticks out.
I think she went to the wilderness for a couple of weeks, found herself.
Yeah, I think she did. But anyway, getting back to Neo, once again, if you were only trading 100 shares, you would have made $126 if you traded every trade. And in this case, based upon risking $200 per trade, you can see the different share size, you would have made $467. So not as well balanced as, I shouldn't say well balanced, but not as profitable as a Holly Grail. And you may be asking yourself, wow, this made more, money at $100 a share, but why didn't, why wouldn't Holly Neo, when you're increasing the share size, show more than, 4 to 1, when this one was like 8 to 1, difference in risk and profits? Well, it has to do with share size. I mean, it has to do with hitting the right trades and the share size. So if you ever kind of befuddled by that, that's what it is. It's if you're hitting the right ones and getting the right share size, you're going to make a lot more profit. So it's fun to play around with these numbers, guys. Once again, all you have to do is go to Tools, Options, go to AI Trade Size, and you can put whatever number it is in here. You can trade, per trade, shares per trade, dollars per trade. But we all like this one the best here at Trade Ideas, risk based on stop loss, 200. And boy, it's just, even when you're just not even trading and you're just watching, it kind of gives you a really good idea of how you would have fared. All right, Steve, that's about it. Not a whole lot to talk about today.
Sure. Let's see if there was any questions I wanted to follow up on. Somebody was asking about a scan, the halt resume scan. Lance, if you could send that in, I really want to look at that. If there's an issue, we need to know about it, but send it to info@trade-ideas.com, with Cloud Link if you can, and then a support ticket will be created and somebody will take a look. And then, is this program primarily for day trading? No, it's not, Lance. I'm going to show you a few things coming up here. Matter of fact, the trade of the week, what we're moving to right now, is always in a swing trading time frame. And trade of the week this week was found on one of our trying to figure out the lawnmower man's here if I need to shut my window. You know what? Hang on one second. Cats are going crazy too. I'm finding the good in it, that he always comes during my webinar. Okay, so Xilinx trade of the week was found on the pullback to the 50. I think it was shown on the email document that went out. It's also one of the scans that is on channel 4, I believe. It's on that channel 4, isn't it? The pullback to the 50, I believe. Regardless, we found Xilinx. Now what I'm going to do is I'm going to zoom back to what we were looking at and what we really liked. And I'm going to do something here. Okay, let's see if I can. I don't want both of those in there. Let's try one more. There we go. So here we were. This was the Friday closing candle of Xilinx. A really nice push up and 3 beautiful days of pullback. There's our spike down through that moving average that's supposed to catch it. And then there was a double spike down, double test, and then a nice kind of a doji close. Well, Andy and I actually talked about, where the trigger on this should be, and we both agreed if we put the trigger, I'll use an orange line here, if we put the trigger right there, more than likely we could get spiked into it right on the open, and then it could still go down. So on these types of trades, pullback alerts, flags, I kind of like to go back to prior day, and so this technically was the actual alert trigger price. Here's the document. Here's the pullback to the 50. There's Xilinx on it, and there's our chart, and there was our original blue line. 2 candles back. That's kind of the one way I want to do it, to not get whipped into it quickly. Well, let's zoom forward one day. Okay, didn't take out the Friday wick, but it did go lower and create some more noise. So this is what we had on Monday, and I'm going to call out Waleed for doing a good job. He typed in here that he listened to what I said yesterday, and what I had said was, well, now I'm more interested in this day, which becomes the new prior day candle. So I said, I'm moving my stop, guys, down to here, because this still looks like a pretty good entry, and that's how we would have written it up had it looked like that, on Friday. And so good job, Waleed, because today, boom, it triggered, and we've got a little bit more of an early entry than, I'll admit, the technical entry that was written in the email. So
whoa. You can't call that you said it triggered. That's not trigger.
I'm not. Okay. Let me finish my thought.
Okay.
I said, for people who showed up to the webinar early yesterday and got my updated thinking like Waleed, in my mind, in my book, I moved it down to here. But the official trigger is still here. So yes, officially, Andy's right. It didn't trigger, but the way the trade's set up, You know, there's,
Sure.
and I'm sure you're not going to disagree with me, Andy. Here,
I
it
was
didn't look
thinking
that.
this. I know. I was thinking the same thing. I was thinking,
Yeah.
oh gosh, I wish we can go in and change that now.
Well, Waleed is my test, as my alibi. Yesterday
Hmm.
we talked about this, and he actually did it, and that's why he wrote in and said he got a nice early entry. Now he's in the money, and maybe a nice head start on the official entry, of course,
Hmm.
here tomorrow. So that's kind of an interesting little way in which this trade did develop, and maybe a good reason to show up on the Monday webinars, because if something happens interestingly on the trade of the week and it hasn't triggered yet, and if I want to make some sort of an audible or some sort of a change in my perspective, tune in and grab that information. But that's
No,
definitely what happened. Go ahead.
let me add to that. That's a very good point, and Steve is right. I mean, Waleed has been coming here faithfully for years now, and he is learning. I mean, anytime you got a pattern like that on a strong stock, just recently hitting a multi-month high, and then you get a pattern like this of down stepping bars, and you have a bar reversal. Look what happened as soon as it reversed even yesterday's bar. There was a sudden move. Not only do you have new long interest coming in, you have shorts who may have been riding this thing down. Now they hit their cover spot. You got a bar reversal, and it's very common to see a move like that. So kudos to Waleed or anybody else who may have jumped the gun there and jumped on it early.
Now the price target
Okay.
here is basically up. No, it's a good thought, a good reminder from another mouth. The price target, at least is to try and sell something we can get it up here, which is in the realm of possibility. I mean, look, we're making higher highs along the way, and so we're making higher lows along the way. Maybe 3 or 4 or 5 days, we get a nice push up here to this level, and it's just kind of right in that channel that we're talking about. So 2 reasons to line up there. It kind of comes back here to the beginning of this gap back here and the high end of the existing channel. So what we're trying to do, guys, is not be the person that's trying to buy, the breakout. We're trying to find established channels and find the safe side of that channel. And the way it developed yesterday with a nice little tight range bar gave us a little extra early entry that Waleed took on, and anybody else that decided to. But it's on its way, hopefully, knock on wood, it digs in and doesn't break this little channel that we got going there now. And maybe it'll be a nice 2 or 3, 4 or 5 day trade and get up into this level and start taking some profits. Ideally, it'll be that simple. We'll see.
Mm-hmm.
All right. What to next? All right. So again, this goes back to who was asking about day trading. Okay, Earl. So I've got a scan here, and this is in the ebook. And Scott's going to talk about the ebook at the end. So if you don't have it, you're going to want to get it. But it's this thing right here, the A table. It's giving me a top list, a curated list of a lot of ideas. Okay, but it's up to me to decide which ones I like. And I'm going to pull a few of these here at the end of the webinar. We're going to put some interesting price alerts on them and share them. But we've also been, Andy and I and Jamie and Michael have been testing out, a small live account for the purpose of testing and finding bugs with Brokerage Plus. And it's day trading only. I don't really like to day trade. So, Andy created this alert a while ago, and it's really coming into much more interest and focus to me lately. And I spent an hour with a guy yesterday who paid for a one-on-one, and he's a new trader, and we really just focused on this right here. And it's kind of occurring to me that this is kind of an interesting little 1-2 punch here, this strategy. These can work well. So for those that don't know, this A table is looking for stocks that have a high score. The score is our filter. It's like an IBD score. We want to find stuff in the 90s or maybe the high 80s. And that's most of the homework that's already done for you. If you're not adept at looking at charts, we found an ability to give a chart a score based on its technical prowess and also the fundamentals behind it, a little bit of weighting there as well. And so this scan is only going to find stuff in the 90s. And when we do that, if I look at my, if we look at the daily chart over here, we're just going to find stuff going from the lower left to the upper right, pure, plain and simple. So it's about as simple as you can make it using our score filter to find stuff in the high 80s or 90s. And then I'm also sorting here, actually the colorization is going towards the shorts. How many shorts are in there? Well, in this case, IIPR, 31% of 6 million for low float stock, and more than a third of them are almost short. They're just asking for it. So I think you can probably guess we're going to come back to that one at the end of this webinar. But what I'm getting at is there's 2 different ways to enter these things. And one of the ways I've been playing around with day trading is to try and find them when they come back and they tickle that that opening range, like this guy right here, or maybe that close there, if I can find even a better example. Stocks that are on this list, but are maybe getting jammed down on the open, and that's where this scan comes in. This is looking, Andy called it fittingly, I'll take that, thank you, because a lot of this stuff is being sold right down on the open. Here's today's example. If I can zoom out a little bit, there's our arrow. Look at that, that arrow actually kind of nailed the low of the day, all right? And it also, the low of the day, when we immediately look left at the bigger picture on the daily chart, it's pretty darn close. I would have liked to have seen it hit that moving average because I talk about that so much, but sometimes close enough can be good enough. But that was the entry point. If you're trying to get technical and cute and time the jump rope in day trading, I'm gonna tell you right now, if you're chasing the herd and waiting for things to be green and buying breakouts, you're probably getting frustrated as to why the hell does this price action continually reverse on me and then dump me out and then jam back to highs at the end of the day. I'm sure everybody in this room has felt that if you've been trying to day trade. But this flips it upside down and says, you know, I want to take that momentary point in time when they're jamming the price down and use that to my advantage. So not only have I been kind of playing around with this a lot of times with in the day trading account, I've refined it down, and what I've found is, you know, since, here's the big takeaway, you know, since these are scans that have been working in a really nice long trending uptrend market, these might be excellent swing trade entries, and about as good as entries you can get, I might add, because when we're waiting for those breakouts on the swing trading charts, there's so much energy that has been expended to get to that breakout point many times. But if we can find a cute little entry, this one itself might actually be interesting. I mean, you know, look at that. It popped its head out, 5-day high, and then quickly reversed on everybody. Everybody just got stopped out down here, and then you got this alert saying, hey, here I am. This might be an interesting entry that has a lot of staying power. So interestingly enough, Run was the one that came in earlier today. And wouldn't you know it, Run is also on, I'm sorting by symbol so I can find it easy. Ding, Run is also on our A table list. So we're getting a little overlap here. Let's break this down to see what we're looking for, because one of the reasons we're getting overlap is I'd have a shit ton of stuff coming through here if I didn't use the one filter that Andy created called the stock composite rating, the score. I'm loosening it up a little bit down to 80, whereas over here in the top list, I've got them, I think, at 85. So there's a little bit of less score acceptance here, but I only want to see the stocks that are jamming down. So here's what's happening. Here's the alert. It's a new low. Okay, so that's what triggers the event. We get a time stamp. We get a price stamp to the penny, and the filters to determine when that new low appears on this window. And we only got 2 of them today, and I'll show you why in a minute. We got to be down 1% from the close. We want to find stuff that's being coughed up red and panicking, and people are getting out and trying to protect their profits. And the short-term traders are getting out, but doing it at an interesting level, which is this 8 SMA filter. Now, I know I talk a lot about the 10, and that's what this is here, a 10 SMA. I wish we had a 10 SMA. It's on my wish list, and maybe they'll get to it. Too. Because we'd be able to build scans a little bit more interesting. But Andy did a great workaround. He took the 8 SMA. And you know, two ticks away from each other, 8 versus 10, you're going to have some overlap. And so a little bit of slippage in there. What he said was it can't be no more above, but we'll get a little slippage, maybe up to a 0.05% below. So this little bracket, this little window of opportunity is what shows us the new lows as they approach this very interesting moving average on the daily chart. So we're trying to time something that's happening intraday and then quickly see how it lines up on the daily. If it's just a jumbled mess, then human and machine discretion, get rid of it. But if it's a nice little pullback and a wedge like we're seeing here in Run, that's starting to get interesting. So this, let me finish here. The stock composite's 80, so we're not going to see stocks in downtrends. We're going to see healthy stocks. And this is how Andy also finds healthy stocks, is saying, look, this thing has to be up 10% over the last 20 days. So these 2 filters alone are only going to show me the quality, the cream at the top that happen to be getting a new low down 1% and jammed down close to its 10 or its 8-day moving average. And that's as simple as it is. And then it just becomes an eyeball game as to whether or not you like it. And so when we start to see that on charts like this that are creating a really nice wedge, well, that could be an interesting entry point right here versus waiting for it, you know, to break out and then entering up here. The point is you're getting really amazing entries if you can time it right. Now, is it a perfect scan? Hell no. It's going to blow through you sometimes and it might stop you out. So speaking of that, let's try and determine, what we could maybe expect from this. And that's where we get into the back testing. And what I want to do is I'm going to open it up first just to kind of show people again the wisdom of optimization. And the exit we're going to do just today, exit at the end of the day. And then we're going to do something fun. We're going to say, well, what about hold for 2 days? What about hold for 3 days? And kind of see if it changes, if it decays, because here's the wisdom behind that, guys. Remember, these are in uptrends. And if these are the momentary truth of the test where a lot of people are getting stopped out, there could be 2 or 3 days of really good backwind, tailwind sailing, after that event. And that's the point that I want to try and prove here. So our risk management, we'll do something, really cool, like maybe a 6% move intraday and a 1.5% stop. Maybe change that to 2, give it more liberal. We'll go ahead and run it for the full 60 days and get as much data as we can. So let's first run what happens if we buy those stocks and hold it till the end of the day. But remember, we're scanning the entire day, so it might be a little bit noisy. So we'll see what we get. Of course, Bill, we're going to share the scan. All right, so what we're getting is 105 trades over 60 days, 62% win percentage, not a bad profit factor, and it's going in the right direction. But here's where it gets fun. We go to the optimization. The first thing we notice is, I already optimized this one. Shoot, I forgot. I put the price in there. The price was not very good, above $89. And so I've already done that work for us. So it's a little better than I thought it would look, but not bad, but we can do better. And that means going optimization tab in this one, going to time of day. And look at this, all these trades, and this is not unusual. Look at the majority of the trades happening in the first half hour of the day are garbage. There's too much noise. But look at what happens if we just pull back and maybe let this thing soak in for the day. Right around here at 7:30, we start getting some better trades all the way into the end of the day. So let's run it again using just that simple time adjustment. We went to just taking off 1 hour in the morning and just seeing what that can do. Oh boy, it's barely going. Why would it do that for me? Here we go. It'll kick into gear. Must have been a tired hamster at the server farm. All right, so now we can compare apples and apples. All right, so with just that one little tweak, I didn't get a chance to show you the beginning scan because I already made that change, unfortunately, before we started. But here we are now. Now we're down to something that's interesting. We're down to 67% win percentage and a profit factor 2. The only thing I don't like, and I know Andy sees it, the average winner and loser. So we'd have to figure out a way to do better there. But remember, we did something a little different. We said, let's stop the scan at the end of the day. What happens if we try to turn this into a swing trade? Let's see what happens. So now we'll go down to market close tomorrow. So this is basically a 2-day hold. Let's see what this scan does. So remember, we're not selling at the bell now, we're selling it, oh boy, now we're getting interesting. Look at that. It's proving that this might be an interesting swing trade strategy. And remember the theory that I held, these are strong stocks and we're buying them right on that jam down where they're trying to force the weak hands and then bounce it back up into play. So already we've improved this thing tremendously, calling it a day-and-a-half hold or hold it today and sell it tomorrow at the close. What if we do one more? Let's run one more and see what happens if we say a 2-day hold or a 2.5-day hold. So it would be day after tomorrow at the market close. Simulate buy, we'll give ourselves a whole new fresh run here and we can compare. Oh, come on, that last percent. Quick question, when will we be able to put the one Holly screen on instead of 3? We don't even have that yet, Gerald. It's coming. That's a feature update that is coming.
We're stuck on the Italian flag.
Yeah, oh, there we go. Come on. You can do it.
Trying.
Do you have to loosen your stop for swing trades? You could, Waleed. You can certainly try.
But you can go down to maybe a 3%.
Yeah, but I'm just using the same kind of setting, kind of to prove that point that you know what, there's a lot of meat left on the bone. There's a lot of food on the table. Okay, so pretty much the same. That's interesting. Let me try one more thing. Let me just try the next day at the open. So at market close, at market day after tomorrow, just to see if there's anything different, because that was kind of weird. Those were the exact same values, which could have been that all those trades got stopped out or hit their targets and then closed out. Let's just see what this says. So this one's going to slow down on me too. There we go. So whoever asked that question earlier about, is this just for day trading? Hopefully a good example here, how we can, try to back ourselves into maybe some interesting swing trades, because we are moving that direction as a company as a whole, recognizing that really where, the market is. People want to have second jobs. Okay, we did get some improvement here. We got some improvement. So it seems like holding this trade for today, tomorrow, and then selling it on the open on the third day is giving us the best bang for our buck. $1.17 average winner, 64 cents average loser. Even though it's only 55% win percentage, the most important part is that we cleaned up this area here. It's always the most important part to clean up. Now we've got it looking a lot more profitable, and where you can absorb some of the losses and still make marches forward with that kind of a setup. So that's the idea. That's kind of what's been interesting in my world lately when it comes to, if you have to do some swing trading, those seem to be kind of the way to go. And I even explained on the, I think the last webinar, that these are the best ones if you're auto trading, using the Brokerage Plus. Oops, wrong one. If you're using Brokerage Plus and you want to come in and auto trade, and you see like run triggers right there, and you're like, boom, now I want to trade run. Oops, try that again, trade run. Buy using one click. I buy using one click long, but my one click long already has the instructions to put the stop at the current low. And that's a great way to trade these particular setups, because once it does spike down and jam down and start to come back up, if you see that, that's probably going to be the low of the day. Not always. They'll do a double attempt sometimes, but if you want to get aggressive, sometimes you can just use that as the low of the day if you're day trading it. All right, so I know somebody was asking about this. I will give out the alert one, the I'll take that, which again seems to be a neat contrary indicator to grab shares when other people are puking them up in panic, or they're getting stopped out because they put their order into good till cancel order, market stop, and then went to work and let E-Trade sell them out. So we'll go ahead and share this guy, and I will drop this in the chat window. Here's the chat window. And I'll just call this alert scan. Drop that in. You guys know what that is. Okay. And then, the A table is available in the ebook, but I'll put that in here as well. If you haven't read the ebook, you're going to want to get familiar with that, because I explain a lot more the wisdom behind, what these scans are looking for here. So I'll call this the A table. All right, that's in the chat window now. All right, let me minimize that. And so the next and final segment here we're going to do is check into last week's, oops, where'd you go? Last week's price alerts, not bad, and we're going to go to the same well again this week. Just a quick click on these to see how they were doing. ENPH, this is one of the examples in the ebook, guys. We were talking about ENPH in the ebook way back here, and so just a good example of the one that we pulled out for that, and another example is Pro, which is going to show up here in a minute as well. Just continue to kind of move higher and trend higher, long-term beauties. So that one gave us a little bit. We're going to focus now on the green line. That's where the alert was triggered, and so a nice trigger and beautiful push through in there. AYX, same thing, green candles through there. Visa, a little choppy, but a good finish to today. And Newmont grinding sideways, but boy, we might need to put this on the list. It's actually going to keep that on the list from last week. Yep. So we'll just turn that one off. We'll just turn it blue. and then
There you go.
back there. And then pod never fired, so we'll just leave that at that. So I'm going to delete these and delete pod, unless pod needs to stay. Nah, pod's not doing what it should be doing, so we'll delete pod. And I've got a few more. So we're going to leave Newmont in there because it didn't do anything other than tickle the alert and pull back, but it's coming back for more. So if gold wants to continue, we will see. All right, so coming from all the A table, which I just shared with you guys, we'll go through these rather quickly. I'll bring them up to show you how I try to focus on the higher end stuff, meaning sorting by short float. Got the dark colors all lined up there. Now I try to focus on the higher end because that's where the short squeezes are most likely to happen. So right off the bat, the very first one, of course, at the top, unbelievable. We'll make that in our notes. I'm going to do a head start. I'm not going to do the all-time high. I'm going to do this high back here and make that our trigger. So 134.79. I'm going to make a note. Low float, extremely low float, extreme low float, meaning this thing could really move. It could really move because 31% of them are on the wrong side of the boat. They're short and they're losing. This could be a very interesting one, maybe even 5-star. The next one on here is going to be Little Wing, Stevie Ray Vaughan song. What we got in this entry case is more of just kind of a pennant formation. So we're going to look to make the entry. I'm going to do it on this one right here. This is going to be a good head start bar, 95.20. All right, the next one is Shake Shack. Look at how it's holding that 10-day moving average. Here's a jam down right there and then moved higher. Touched it right there and moved higher. So this one may still have a day or two underneath it, but I'm going to use this. I'm going to use another head start. So sometimes I like these head start. 44 cents is the one we want. It's not quite the all-time high, but it's a head start high. SPRT, we're kind of just going down the line here. Maybe it didn't touch that line and maybe it's getting ready to move higher. Maybe it'll chop around a little bit more. I don't know, but I'm going to put this one above today's high right here. And then we get to Pro, the second one that we talked about in our ebook way back here. And good things have just continued to evolve since we put out that name in the ebook based on the scan that we're getting it from. So it's setting up again, big pullback, a little bit of profit taking, but it's coming back for more. The short sellers are still trying to unwind. This one I am going to wait for all-time highs, just the way it's kind of setting up here. We'll do this high right here, 32. And yes, I will share these for a moment in a moment when we get through with them, with the cloud link. Where we did Pro, so now we're getting close. Run, this was the one, remember, that showed up on the, I'll take that alert this morning, right there. The arrow showed up right there on the low, and that might be the spike. So we're going to do just like we did with Xilinx. We're going to go back a day and use the high here at 21.23. Kind of get a double confirmation bar reversal. Blast through 2-day highs before we trigger that one. And then lastly, this one's going to be fun. Andy, you're going to like this one. Here's an example of what really not to chase, because I think it's got a little bit of airspace under here. So what if we eyeball this thing, and maybe it's going to try and jam down and take out that low right there. So we're going to eyeball a pullback low just for fun. I know Andy likes pullback lows sometimes. We're going to just call it out, pull back entry. Watch price action intraday to confirm. And we'll see how that triggers. Maybe if we time it just right, it'll be pulling back to that rising 10-period moving average that we've just been ad nauseum hammering. And so that's it. 1, 2, 3, 4, 5, 6, 7, plus the Newmont from last week. This one could be a real interesting one. Extreme volatility. Be cautious on that one, but nonetheless, I'll go ahead and save it. And I see before we head out, somebody asked to look at a chart. CPRT. Was that you looking at that? I'm sorry, somebody was asking about a chart. I was getting distracted here.
CEI?
Somebody said if you have time, can you look?
Oh,
Oops,
let me see.
trying to multitask here. Share. Copy. All right, price alerts are coming.
STNE.
That was it.
Mm-hmm.
So we'll look at STNE, then we'll head out and bring Scott in to talk about some discount codes. STNE. Ooh, kind of spiky and wicky. I always like to see what the personality of a stock is when I look at it, and that's got kind of like a beware of dog thing going there.
It looks like you didn't
Did I not type it
change.
right?
No. When on your price alerts, you didn't change the short to long on coup.
Oh, good point. So let's do that. Thank you for calling that out, whoever caught that. That's what happens when you do. Yeah, Ollie's been here enough. That's what happens when you do a pullback alert. Here's what you guys are going to want to do. The pullback alert is lower, so it's coded as a short. Let's go back and edit that price alert and just change it to a long. And that's all you guys need to do. I won't go ahead and change it for you. I'll let you guys change it yourself. Thank you for catching that, Waleed. Back to STNE. You know, the personality of the wicks are not really that exciting, but it does enough volume, 3 million shares a day today, averages 1.5 million a day. So let's focus on what it's doing, all right? But again, you notice that it has all these wicks. It never seems to really want to go in one direction and close on highs. So remember that in the back of your mind. This thing never likes to close on highs.
Except for
Nonetheless, it did today. I was just going to say it did today, and it did on good volume. So there could be some good follow through. Now, obviously, it makes a lot of sense if you can get into that gap. Tomorrow, it could be interesting. If you're already holding it, that'd be even better, because I think what you could expect is either a gap up or some follow through for at least half a day tomorrow. So I think this thing could be in for at least a half a day of follow through. And after a day and a half of movement, especially in a stock that doesn't like to close on highs like this one, it's going to want to revert back to its personality pretty quick. So I wouldn't trust it more than the morning tomorrow. It's my honest opinion. And that's it. All right, so Scott, if you're there, we're ready for you to come in and talk us out.
Yeah, hola. Yeah, a couple items on the way out. We do have a podcast that we release most Fridays. It's the Trade Ideas Podcast is what it's named. So just search for that wherever you listen to your podcast. Add us as a subscription. Check out the back issues. You've got some good interviews back there. Should be a new one up this week. If you subscribe, you'll be all equipped to get the next one. So do that. Then we've also got a new ebook out. Both Steve and Andy contributed chapters to. There's three books, 2 chapters each. So there's one about swing trading, and one about active investing for the passive trader, one about range breaks and pullbacks. So go ahead and check those out. Just go to trade-ideas.com/setup and put in your email to get the download links and get those books, get educated. Check them out. There's a code. The code is good for this month, July highs. It's all caps because it is case sensitive. So just use that when you're going to do a new subscription or an upgrade, and you can save. So whether you're just subscribing for the first time, renewing a new subscription, or upgrading from standard to premium, just use that code and save some dough. It's good for 15% off your first month or year of any new subscription. Just email us at info@trade-ideas if you have any questions. The info@ email address is the best place to send all your queries. It goes into our help desk software. It doesn't get lost. It goes to the appropriate team member. It's the best way to get in touch with us. You can also follow Steve on Twitter at TodayTrader. We've also got @TradeIdeas. Facebook.com/TradeIdeasPro is the Facebook page to follow, and share everything we post there with your friends. Thanks, Steve. Thanks, Andy. Everyone have a good one. We will see you all soon.
See you next time.
Yep.
See you Thursday, everybody. Thank you.
Have a good one.